All right, let's get into it. Welcome to day 3, hump day. Let's start with crude. Crude looks like it's in a familiar position. What is this? What does this position in crude look like? Does anyone recognize this? It's the same situation as yesterday. What do I mean by that specifically? Yearly is extended. We know that. We don't need to talk about it again. It's the same thing as yesterday. I'll reiterate just for those who might need to hear it. It's really bearish. The most logical, probable next move in crude on this time frame is at some point for some kind of a retracement, right? As value works higher, price works lower, they meet, that kind of thing. Now, as you see, crude and other markets, they can get stuck in these little things for a while. S&P can do it, so it can happen. So that's why we don't translate that read into day trades. I don't look at the yearly and say it should pull back, it's extended, and start shorting everything that moves on the DVA or price action or whatever intraday. Do not do that. Quarterly, again, is a non-factor. The only thing, we're not using quarterly DVA because we just started October 1st, new quarter, new month. We'll defer to the month for the DVA because it's the same math and data going into that. So the only reference we could possibly use in the quarter is quarterly prior value high, which guess what? Is confluent. If you look back up at yearly, is confluent with yearly developing value high. So that'll be a nice spot if we were to, fairly quickly get down there. Monthly, hello, pretty month. We are at an inflection for the month. Can we remain imbalanced up? Weekly, that's the same situation as yesterday. Imbalance pullback for the month, rotational for the week. Very neutral, probing a lower extreme, higher extreme, lower extreme, higher extreme, dilly-dallying in the middle. Now we're at a lower extreme. Now, the one thing that's not great about the week here is just the way there's so much bar-to-bar overlap. You notice how yesterday there was clean price action, and then today it's just really overlapping back and forth and back and forth. That's not as good. But it's not a huge factor that would, keep us from putting on this narrative idea. Again, same as yesterday. I'll stop saying that eventually. We could do a merge. Let's see here. Let's just split out here. And let's do another merge. It adjusted the composite value low a couple ticks, which, by the way, is where the market stopped in front of as you look at, the recent action. So it was lower, and I was like, it didn't quite get down there. But now that we make the new CVA, it's kind of essentially right at it. Looks like some passive participant stepped in right there, Okay, so scenarios for crude. Well, we could get the same trade as yesterday, right? This market is flirting with, although it hasn't been, again, remember how I said on the weekly, we haven't gotten clean price action. It was a lot of bar-to-bar overlap. Take a look at the imbalance down itself. Halfway to VWAP, all the way to VWAP, continues in balance, right? So just because we go halfway to VWAP here again in this, call it a channel or something, right? Nothing's really changed in terms of the long-term momentum of this market, even though we flirt with going imbalance or rotational. That's the difference in the quality of the signal yesterday that we could aggressively take and get on board versus today, where it's like, well, doesn't feel like as significant of a change when it comes to rhythm, momentum, that type stuff. Everything else checks out. It's the same narrative situation. So yeah, I'd like to see some type of, another thing that has me a little bit concerned about this as we almost transition to trading is just the way this low was kind of put in. I'd love to see us go take that low out. That would help me feel more secure about getting long. We may take a long attempt or two, before that happens, but I'm just kind of talking out loud in terms of comfort level and what I'd prefer to see happen. So we'll kind of need to be stalking that as we continue prepping and whatnot. Alternate scenarios. Let's think deeper, right? What else could happen? We could go lower, come back, and start to hold imbalance down on the weekly, right? We could go lower. We could put a bar, right? Not just one wick back up through it, but we could actually start to get well down here, print bars, print an up rotation where the majority of that rotation from low to high is below weekly developing value low. So we could see, a little bit of bearishness start to form there. If that starts to form, well, then that's just a dissonant picture, right? Between here and here, which, by the way, I think the market's kind of chopping in here a little bit. So that is either going to lead to one of three things. One, we're going to chop in that zone. Two, we're going to find resolution in one of two ways. The second one would be the monthly breaking down, not being able to hold imbalance up anymore. And the third option, the one we traded yesterday, the weekly remaining rotational and the monthly winning that battle. So haven't quite touched it. No, we did, to the tick, that low. So we've already touched monthly development value high. Another way of getting into this trade, if we don't get in here, which I'm kind of in stock mode, I'm kind of considering it. Usually you want to be very, very careful how quickly you trade as you're transitioning your prep. Give your prep, especially you guys who aren't CPTs, right? Which is going to be most of you. Be very, very careful. In fact, let's put it a different way. Don't trade. Don't even think about trading until your prep is really, truly done. Don't do it. I've never seen a good thing come of that. So we kind of have a downside scenario there. If the monthly breaks down, if the weekly goes imbalance down, we have our upside scenario, which is setting up as we speak. And then there's going to be alternate upside scenarios. What if we don't get an entry here while we're prepping the S&P or something and don't get the trade? We could get on board with an imbalance up, as we look to complete the move higher towards weekly development value high. Let's adjust that level. And so on. So good scenarios there. Remember these double distributions. We have our CVA here. Let's make sure that level's still good. I need to adjust the lower one up a little bit. There we go. Let's save that. I'm getting in the habit of saving my chart book because I do all this DMI work and it needs to be precise for my, accountability with you guys to say, here's what I saw yesterday. And then, something happens and I I lose that work. All right, S&P. S&P's in a bullish yearly environment, but nothing to lean on here. We've made a rotation away from that imbalance pullback. Quarterly, we're now clearly in a spot where this I can call a bearish level. Bearish, bullish, a bullish level. Why couldn't bearish and bullish be a slightly more different phonetic words? You know, why couldn't it be like, not like John and Jim? Why couldn't it be like Sally and Rhoda? You know, like we need different words that we don't trip over. Bullish, because what could happen? We could get our breakout pullback now, right? Anything into here, maybe developing value even creeps up into here, right? And then we get a nice little combo breakout pullback of prior value, imbalance pullback of developing value. Bigger picture, so that'll take a while to unfold. It's not just you know, pressing at us right now. But overall, a bullish environment there. Again, new quarter, new month, October 1st. So we're not focused on this DVA. Otherwise, we'd say it's extended. But guess what? We'll go to the monthly and talk about its DVA. Adjust this level. Again, look, the development value area low hasn't moved. Monthly. So we've traversed prior value. We've now gotten quite a ways above it. Hey, if this thing wants to really go, I could see this being a, you know, a breakout pullback area. Let's give it a bull level so we can look at that. Now, what's the dissonance that should start to creep into our heads here with regard to taking that breakout pullback? Just how extended we are on the developing value on the time frame, right? That's going to be more very, very, very fast trend, right? Here was one where we get to the 1.5, we come, maybe the 1.5 keeps creeping up, maybe we pull back, maybe we start to hold above the 2, right? That's fine. All I'm saying is that it's unsustainable. So I'm more nervous and not comfortable when I put myself in a position where I demand a lot from a market. It takes energy to sustain fast trend imbalances, and markets only have a limited amount of energy. They don't run in straight lines forever. They ebb and flow. So considering this trade, you know, it doesn't feel warm and fuzzy. It feels dangerous, but it's something that we could go for and be careful about. Not go DLL trying to express that idea, not taking repeated re-entries, things like that. Check on crude. Not bad. It is Wednesday, so we do have crude inventories today. I'm going to halfway stock that because we need to focus on our preps. I've got my execution chart. I can keep an eye on it. Okay, so yearly, not much to do there. Quarterly, we've transitioned to possible breakout pullback to prior value high. Monthly, we've got 2 bull areas, one of which would be a dangerous breakout pullback. The other of which would be dissonant, right? Where you fail to hold above prior value. So that's a bearish thing on that market, but it's still imbalanced. So we would be dissonant in that, inside that space. Now to the weekly. What was the overnight low? Oh, what happened? Whatever. The overnight low was weekly imbalance pullback right there. Weekly's imbalanced up. We've left prior value. and we are imbalanced up. So it's bullish against this, 4505 area. So big picture, what do we have in this market? We have 1, 2, 3, 4, 5 bull levels. That's never my favorite. So crude going down a little bit here. So no real good entry given. It's one of my least favorite environments. Who wants to be in a situation? It's like some of these gurus with their levels. It's like, I got, a bull level here, 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 and here. And maybe we bounce off one of them and then we pat ourselves on the back. I prefer when I have a clear bull line in the sand, a really nice clear one. And below that, I can be bearish. That's my favorite spot for a market to be in, or vice versa, right? I don't care bullish or bearish, but I like a good line in the sand that if it's wrong, we can look the other way for opportunity. This puts us in limbo, right? If we're trading and we get long here and it stops out, can we really short here before we get in front of this? Do we want to get long here now that this is broken down and is bearish, right? So it puts us in a dissonant position in between every single one of these. So we need to do some deeper ranking and distilling if we can, and make some tough decisions as to potentially what's more important. What might we lean on more? We've got no confluence. None of the levels are stacked on each other. Yesterday's value and an older CVA is here. We do have a good overnight balance, right? We can just pretty much look at that. Essentially where developing value is. I've got that overnight profile right there. So value lines up, value lines up. Okay. So that all checks out. So what if we were to highlight our overnight balance on our DMI chart? Got to remind myself to do it on both. Let me do it on my real one up here first. All right, so we have an overnight balance there. I think the preference for us as day traders, short-term traders here, is the weekly. I think based on how extended the monthly is, we don't have the quarterly, right? Monthly's extended. That I want to lean less on this prior value high. Okay. And I want to lean more so on the weekly, maintaining imbalance. Prior value high is a bit of a conflict with this overnight distribution. The overnight distribution has really not respected prior value. It's gone above it and below it, 24 times. So I'm actually going to defer today to this overnight balance as a priority over prior value, at least prior value high. We'll pay attention to prior value low. So to me, it's all about the weekly. We can kind of feel good about a clear line in the sand there. I'm not going to be too aggressive from the middle of this prior value. I'm not going to be, really trying to get long into the upper end of it. We'll use it as any other distribution. We'll fade the lower edge. I'd love to get that trade. That's the best trade of the day for the S&P in my mind. Or if we have to, we can chase higher with a breakout pullback of the overnight balance to get on board the break of prior value with the weekly imbalance continuing and all that stuff. If weekly breaks down, I am comfortable looking short, right? I understand that initially we'd be inside prior value, which is not great. The distribution yesterday, I wanted to look at the price action relative to the distribution, how it was formed. It's not fantastic. Crude kind of pushing a little lower, so nothing really to do there. It's not a great distribution, and this value area low, in my mind, is a touch low, right? So if we did say, let's say we took off ABC period. That's kind of much more accurate, I think, of a value area. In fact, let's just leave it that way. This is atypical for me to do, but I just didn't like the look of that value. So yeah, that's confluent with weekly. Crude running lower. Pretty rapidly. It's good. That's a good in terms of what we talked about during the prep of I can feel more comfortable getting long if we go get that stop run lower. So we've got the stop run lower. Who knows if it stabilizes from here and bounces back up and gives us a weak counter rotation to trade. But if that's what happens here, nice. That'll feel good. Yeah, RPD, I got you. I will try to, y'all can keep reminding me, feel free to. I will try to narrate a little better exactly what chart I'm talking about. So everyone clear on the scenarios for crude and the S&P? I don't know. Let's see. Wait a second. Did I do something wrong there? Remove rightmost. Yeah. So I guess we had a holiday session there. So that doesn't work out well. Remove rightmost. Yeah, I'm not sure. It looks like this level is at 1050, same as you. So let's adjust it. 10, 12. Who cares? But good point. That's where it looks like it should be. Crude with a sharp bounce back. Two and a half minutes until the open in crude. Probably going to get ourselves into a long position here. We're long. Bit of a lull here. It's always kind of a little awkward getting into a position, a couple minutes or whatever, coming into the pit open. And it's a little higher risk. Things can kind of fly around on the open. Things haven't been crazy around the open and crude like they were back in the day, but it can certainly happen. Bit wider stop here, bit smaller size. $30 seconds. All right, we are out of there. We'll watch for a little open shenanigans. If it starts to snap back pretty quickly here, look at another re-entry. I would have held on till definitely below that wick had the delta not been pressing. You see how hard the delta was pressing lower there. So I respected it. Now they press even harder. Okay, so at this point, we stand aside from pretty much even stock mode based on what's happening, right? Super strong selling. You know, what we had talked about before has kind of come to fruition in terms of a messy imbalance, just kind of persisting. So we'll look for the strength weakness picture to change, which it's not. Look at that delta. Hello. We'll look at the strength weakness picture to change in this market now. We'll look for buyers to show us that they're strong, which is probably going to be a minute before that happens. And sellers to show us that they're weak in some way. We'll look for a very clear shift to rotational on the DBA. Look at this. This is where you know your lines in the sand are really good. I've said it 100 times. I'll say it again. When you get a trade that's right from a good line in the sand and it's wrong, and you see this type of reaction through it, you know that it was a really good level that a lot of participants were keyed in on. Yeah, a lot of confusion today, whether I'm long or short or what chart I'm talking about. Not sure what's going on, but let's look at this. So yes, I know that it's not, this market, it's trying to go rotational. It's been in kind of this slow trend. I took an aggressive entry when the momentum shifted here. I'm getting long right there, right? It's from a lower extreme. It was aggressive because, as I was saying beforehand, technically, the market is in kind of a sloppy, imbalanced down state. So it was an aggressive entry. But hopefully that makes sense. The full narrative, everything lined up. It was all there. We had CVA structure. We had just gotten a wick. If you look at this wick, right, was a move we had been holding right here. Here's the composite value area low, right? So over here in the CVA chart, we were just wicking through there and coming back up, just like yesterday. The only thing is that, yeah, technically this is still an imbalanced down market. So that was an aggressive entry of me trying to get in, there. But there was some rotational nature to it that was starting to show. We got halfway to VWAP here. We kind of held developing value low here, right? So I kind of transitioned my read to rotational. And as long as if this pullback could hold, it would look perfectly rotational in hindsight. Doesn't look like that now based on what happened on the open. One of the crazier opens in crude that we've seen in a long time. Taking it all back here. S&P still chopping around in the overnight balance. 24 minutes until the pit session open there. So we'll focus on crude. So where did crude run to? It ran to the next CVA structure. It ran and tagged weekly prior value high, and then went right back to the scene of the crime. Nothing has changed contextually, guys. Not one single thing has changed contextually in crude. It's rotational for the week. It's just at a lower extreme. It really went and pushed a super extreme. It's imbalanced for the month. No change there. If this market goes rotational, I stock a long. Yeah, that's true. The buyers have not pushed nearly as hard as those sellers did. You know, a nice lesson off the bat here today. Is around risk management, stopping out, taking your small loss. It shows just how important that can be. If I would have gotten deer in the headlights there and not, had ego and wanted to be right and whatever, whatever excuse you want to give it, could have got really hurt right there, right? Markets can do that at any time to you. You have to protect yourself. This is not a game of being right. This is a game of identifying opportunities, executing on those opportunities, and managing risk while you're seeing which, if any, of the opportunities are going to work out. Prashant, that is correct. Nice color, mustard, the mustard color. Yes, it's a TPO based prior value. You can put a study on TPO value area. I might try this trade again. I know it's really aggressive again, but if we find buyers who pop us up through this thing again, I'm just saying I might try it again. It's aggressive. I want you guys to know that. That's really aggressive. Our definition of the current condition needs to be imbalanced down still. But whatever that was so far as striking me is just like, I think the word I used earlier was shenanigans, So it's right into the edge of this CVA and whatnot. So it would, and this is almost like a time acceptance compression. I'm not trying to talk myself into the idea. It's probably not going to happen, but something changes. Anytime I can get into a position where there's been inventory cleared out behind me, right? That's good stuff. S&P poking its head above the overnight balance. If I take this reentry, it's going to be, very momentum based in terms of stop. It's not going to be all the way down at the current low of day or anything like that. It's not time acceptance into the CVA. It's definitely not, because we're not, this little movement here is below the CVA. CVA is perfectly pretty much confluent with this mustard area that I have here. So on the RTH chart, top right. So it's not time acceptance. It is a form of lack of excess. It is a form, very, very short term. All right, back in the long here. Essentially, you could look at the RTH chart there, and that's kind of the momentum that I want to see hold those last two, up bars. Pretty much need to see us break out here, outside this little sideways consolidation that we formed into the CVA, into the PVA, into ETH DVA. Got a lot of stuff against us here. I do want to stress again that this is advanced high risk type entry. This is not standard type stuff. If you want to take the standard approach, you don't get in yet. You wait to see if buyers really show up here. If we go rotational ETH, right? We pop in, get halfway to VWAP or something. And then you fade a pullback. Then you get an extreme fade, which would probably be confluent with like an imbalance pullback RTH. That's the safer way to do this. The only time I make compromises like this, guys, is when I really like a narrative and I want to be very aggressive getting involved. I can manage my risk very effectively. I can use momentum. I can take tiny paper cuts. If you don't have that skill set, you should not attempt these type of things. I don't want to be, maybe I shouldn't do this week, right? But I'm just showing you guys what I do. But this is not bread and butter type stuff, and I'll shut up about it. But really want to stress that, because where traders get into problems is when they're trying to develop. They don't have the skill sets yet. They don't have the ingrained habits and processes, and they try and do stuff like this all over the place. They're just shooting themselves in the foot every single day, making compromise left and right. Don't do it. Out, flat. Didn't go. That was the trade where compromise needed to go. Didn't go. S&P just kind of stalling past 9 minutes, 10 minutes or so up there. Really quiet, not much movement there. All right, it's going now without us. That's okay. I was thinking about it. Do I want the third entry here? No, I'm just not going to be that aggressive. And there it goes, but it's all right. Now the trade is really stalkable. Now the trade could set up for us in a classic sense to get involved. I like this wild crude. That's what made me fall in love with crude 12 years ago, I guess. All right, so we're back into the CVA. We're back into prior value. We're rotational ETH. We're imbalanced up RTH. And again, let me reiterate, the narrative has never changed. That could be a good lesson from today as well. It's not amazing. I didn't see anything coming so early. I'm not sure what you're referring to. Maybe there was something else. Maybe you thought I stopped out quick, on each of those stops, and you were, pleased by that. But in terms of seeing the up move coming, we saw the up move when we were prepping, 45 minutes ago. And I reiterated several times throughout all of this little hoopty-doopty sequence that the narrative hasn't changed, guys. The narrative has not changed. So maybe we get left in the dust here. It happens. Markets are messy. Can you guys tell I'm like happy right now? I love showing the difficult stuff. I was thinking last night when I was going to bed, like, man, I hope we get to show some difficult stuff tomorrow. This like too easy shooting fish in a barrel type trading needs to end. And so we've ended it. It's good. CL had acceptance in your old CVA. I don't think so. We opened right at the CVA. We were below it. There's no acceptance in any CVA until just now. We opened right here. We were below it. We're below it. We're below it. We're not inside this CVA. We're not inside this CVA. There's no acceptance in any CVA. And then we shoot right back up. So here's where I tried the first long pre-market. We had acceptance in the CVA. That changed. We're out of the CVA. I'm trying it aggressively one more time there. Didn't try it the third time. Now we're clearly accepted in the CVA, almost across it. All my exits today have been manual hotkey exit market. I've had stops in the market, but they've been further away than where I've gotten out. Okay. We have a choice to make here. We could be more aggressive, go with the imbalance pullback on the RTH top right, or we could be more conservative and wait for an extreme fade on ETH. I think this market's flying around. I think it's got really good momentum, above average volume. I'm probably going to stalk the imbalance pullback on RTH. So I'm long some, like small size. I'm just going to kind of work into this a little bit here. I'm in for like probably a third of what I could be for this stop. I'm going to stand aside here. I'm flat. I'm going to just wait for this thing to set up a little better. We're getting in the trenches with the randomness, guys. There's not much to this. We've got a counter rotation here on the RTH, right? Not on the 3-minute. So looking for tell me you've put a low in, right? We've got delta divergence. It's holding delta neutral RTH above 0, right? I'm not afraid of this selling. It doesn't scare me. I'm happy to fade this weakness. I'm down about 1.2 R on the session. Back in a little bit. I want to get in a little bigger here, but I'm being conservative. I kind of got caught there on a little fake up move. So now I'm kind of just trapped in a bad spot. I won't let it go any lower against me than what it just did there. I'll stop out if it presses below there. Looking for a micro trend line break, right? Momentum needs to shift a little more here for me to get it in the rest of this size. I'm out. getting manhandled. Okay. Stalking the reentry. You want to see the buyers believe in what they're doing. That little bar right there, they were just like, just kind of, barely floating higher rather than really aggressively sense of urgency type higher. Speaking of higher, the S&P is higher. All right, we're long crude. Markets putting in big head fakes higher, gold crap in the bed. What's going on here? We could have a fun day. Let's have a good one. Buyers just not coming in here. This is getting, more and more bearish the more we just stall sideways, stop run below, becoming vulnerable, short term. Okay, I got stopped. Gold is unhappy. So S&P 2 minutes into the open here. The opportunity is that second chance entry that we talked about, breakout pullback of the overnight balance. Looks like it's already gone perhaps as low as it might go if it's a standard move up. All right, one more reentry at this location for crude. Yeah, gotta stop out again. Saved a good bit there by getting out of that before that full stop run. All right, so RTH, we got aggressive in this area, looked for the nice clean momentum to kind of continue. It didn't. So it's really about ETH at this point. Hopefully those of you who are really patient for the classic setup might be rewarded with the good one. No, Hassan, I don't think I'd give any of those trades more room than I did. When I'm aggressive, a lot of times it has very aggressive stops that coincide with it, and that's how I operate. Um, kind of as a rule. Yes, this flaggy delta is I wouldn't call it a good thing or a bad thing. I would call it a bullish factor. So what we're talking about here is the lack of selling, right? So we had the big thing off the open, that's obviously selling, but then we had buyers come back, take control of the tape. Sellers have retraced here, but they're not selling it, right? It's not aggressive selling. Which is one of the reasons why you see me with the number of entries and going for a re-entry and stuff. None of it's worked out yet. A little bit of bad luck, a little bit of just, taking regular losses that we have to take in order to find the winners. But one of the reasons why you see that is because the narrative is good. The narrative still checks out. I'll say it 100 times. The order flow here is really not threatening. The order flow is bullish, which is helping me stay aggressive. Down just over 2R on the session. Be nice to see a little late rotation capitulation here as we get our potential extreme fade set up on ETH. Every time I glance at ES, it just looks like a lot of back and forth. I'm not sure if it's, some earnings that came out at the open or whatnot. That's probably what it is. Um, all right, so it's into the development value low area, RTH VWAP, prior value, composite value low. Obviously, the imbalance pullback for the month, lower extreme for the week. It's a good set of things there. Delta divergence in our favor. It probably for this trade, for this setup, ETH, kind of the real deal here, not being aggressive with RTH and stuff. Yeah, I'm probably willing to risk the rest of my day down here. I'll probably give it, if need be, 3 attempts down here, with kind of some full 1R risk. It's worth it. All right, I'm long. Such a nice spot to be long. It just depends on short term here if it's going to need to, you know, run stops a couple times or if it's going to be clean. We never know. We can look at what overall conditions are. Do we have a clean, environment with good momentum and stuff? And it's pretty good here. It's pretty good. Just watching the S&P for an overall 3-minute rhythm pullback, which is nowhere near being started or much less completed. So waiting on that market to pull in to the upper end of that overnight balance and CVA structure. See the little push from buyers on the delta. Trying to turn it. Remember, it is Wednesday. Inventories at 9:30 my time. Currently 8:45 Central. I didn't put a DMI out today, did I? That's all right. I'm focused on you guys. Crude headed higher. So this will be a good spot to, take a quick small scale into VWAP, RTH development value high. This standard procedure. Paying ourselves a little bit as the market makes it available to us. S&P made it to the next CVA structure. Big ramp up there. Markets are volatile this morning. For sure. We like that. We like it better when the S&P gives us an opportunity to get involved in a move like that. We can, see coming and whatnot, but that's how it is. Got to accept it. Got to be okay with it. ETH development value high area upper extreme will be kind of the next spot. Look to scale. That'll be in front of kind of weekly VWAP area. That'll be the upper end of the CVA structure. It's a perfect spot for a good scale out. If we get it, we might be looking at delta neutral, right? RTH. It's a round number in front of 82. I do get a bit of a sense in crude right now that it's easy for the sellers to press prices lower with very little effort, and the buyers are working really hard. So just something I'm a little bit aware of there. All right, let's take a hard look at the S&P. Yeah, just not much we can do there. Made it to the upper end of the CVA. It's right in front of 10K delta. Not much to do here. RTH is going to, see if it holds an imbalance higher. This is not the spot to put on long risk, so we're not interested in that. Back to babysitting crude oil. Kulu, I'm not sure if you're still asking this or not, but I already took my first scale into ETH VWAP and RTH development value high. Balance Trader says ES seems to give a better picture than CL today. I really disagree. Unless you were in from, the overnight low area in the S&P, what are you trading off of, right? There's no other references, nothing to lean on. Whereas crude, we've got a nice setup that's taking place here. We've got a market that is rotated lower on the monthly that has room to run on the upside. It's at a lower extreme on the weekly. It has room to run to the upside. The S&P has ran, past tense. What are you doing up here? It's not a better picture. Crude is the better picture for me. For classic Nadro. So we are currently up about half, pretty much half of what we were down on the other trades. Just kind of updating you guys with some, where we're at and stuff like that, as we have kind of a more difficult day. Not that I'm focused on the P&L, not that I want you focused on the P&L, just, a form of, since I'm not showing you, my trades and stuff like that, I'm updating you a little bit. Really, it's a conversation of risk reward, right? What I'm really excited about talking to you about is when we catch one winner out of what, 5 trades or something, and we're, a nice healthy green R multiple on the day. That's what I'm looking forward to talking to you about here in a couple hours. Hopefully one thing that you guys are seeing, we can talk about this in the review session and stuff, but look at the trade Monday, look at the trade. I know that I had a little bit of gold trades yesterday, but it was really nothing. The trade yesterday. And then look at today, right? We take a lot of attempts, we take paper cuts, we get down to what kind of R multiples were we looking at on our winners, on the winning trades the prior days? You see the difference? You see how you skew that, or I skew that heavily in my favor? Nadro allows you to skew that heavily in your favor. My goodness, you want to talk about taking the risk off? Or not risk off, taking the pressure off. That's where it's at, in my opinion. I'm a huge fan of risk reward, and then, tight stops, tight management. It just lets you stay in the game. It lets you have a bad series of losers, which I have all the time. We're having one this morning, right? That don't take you very frequently, right? It happens. I lose money just like anybody else. But a lot of times, if you make 4, 5, 6R on a trade, well, guess what? That's a lot of these little paper cut losses and things that I have to sustain before I even eat away one of those wins. I love being in that position. Like I said, it takes a lot of pressure off. People who are 1-to-1 risk reward, depending on that being well above 50% win percent in order to maintain profitability, oof, that's not how I want to live. S&P is still kind of drifting lower. We do have an imbalance pullback here. ETH. So if you want to stay aggressive, if you really want to, continue pushing longs in the ES, if you get kind of a momentum shift here, here's your chance. I'm going to pass. I'm just not interested in where we are and confidence as to where we're trying to get to in the S&P. Obviously all-time highs is on deck way up here. But I don't love the trade location, so I'm not going to be aggressive about getting into DVA setups, right? Whereas in crude oil today, I love the trade location. You saw me be very aggressive about getting into compromised setups even, right? Not picture perfect setups. The only picture perfect setup we've really had is the one that we're into now. And guess what? It's the one that's, paying us. We'll see though. We're back into kind of a chop area. And nothing really, couple times trying to get through ETH VWAP. Let's notice here. We tried twice to get through VWAP on the ETH chart, bottom right, and couldn't do it. So we're kind of just in like a little chop limbo here where we're in from a good trade location lower. Who knows? We've gotten to scale out. All right, 26 minutes till inventories in crude. Makes sense. We're not seeing the breakout quite yet. This is probably going to be one of those positions where we're just going to have to stand aside, let the number come out, and reassess afterwards. ES with the shift in momentum off the imbalance pullback. Order flow kind of drying up in crude, naturally happening as we head closer to inventories. Market's going to have to get through VWAP and be well above there for us to even consider holding that into the number. In fact, taking off a little more here. Run them. Take off a little more. I'm essentially peeling out of this thing here as we get in front of inventories, just because we're not getting to weekly development value area high before the number, right? So this trade is turning into take what we can get here. Almost like a scalp. We've got a rotation in our favor here. I'm essentially going to get flat this thing up here. It's like, consider it the close. You're running out of time. What do you really think is going to happen? Take what you can get. It is a little squirrely though, isn't it? Has been all day. S&P back up towards the highs. Nice imbalance pullback for those of you that wanted to be, pushing long. It was either long or nothing, right? And I chose nothing. It is a shame, the dynamic in crude oil, how often it'll get you out of a beautiful trade for inventories. It's always been one of the downsides of crude to me, you know. So what am I doing right now? I'm just looking for that exit door. Crude keeps flirting. I got my finger on the trigger to get out of it as this particular rotation is potentially coming to an end, and it just keeps knocking on the door saying, well, I could do a little more. I could do a little more. And so I just keep waiting to kind of exit. Just like that. Well, if it's going to keep going, guys, we're going to have to. All right. So we're 50 cents in the money here. I'm flat. Not going to do it. I'm out. We're going to let inventories shake out. It's been just too squirrely of a day. I feel like inventories today could move $1, you know, so 50 cents is not good enough for that. But we took what was given. And that's, check the box, just another good trade. I am down 0.5 R. Keep in mind, I'm swing long the S&P from a couple weeks ago, so I may be a little more relaxed with the up movement and not feeling the need to do as much on the upside in that market. "11 minutes until inventories." Feel really good about that exit. +2 on the RTH, developing value high on ETH, composite value high. It was a nice spot to peel off the risk and reassess into this news event. Yeah, so post inventories, as long as we don't really go very far down, or if we do go far down, it's like this morning where it's just a stop run type move, liquidity vacuum. Then we're going to just look to reinitiate this trade. We'll use our DVAs. Look, the narrative, the only thing that might change narrative wise is maybe we get into breakout pullback mode over here on the composite, right? Go take out that poor high. That's the upper extreme on the weekly. S&P getting it done. Or maybe inventories comes out and it just goes directly to that target area. And then we're like, well, see you tomorrow. Wish I would have held their inventories. Should have done it. I knew I should have done it. Yeah, my desk traders can hold into numbers as long as upon review they've been very responsible. My desk traders don't initiate a full size position 8 seconds before FOMC, right? So they can and they can't. They have to be smart. If they're smart, we're cool. If you put a full size position on 8 seconds before FOMC and you violate your daily loss limit, I'm probably going to fire you. If you were in an S&P position, had scaled out of 75%, and it was 25 handles in your favor, and you decided to hold the last bit, and something really, really bad happens, and you violate your daily loss limit, I'm probably going to be in your corner and say, man, that's tough. You know, shake it off. You see the difference? I got a lot of friends really happy about Bitcoin today. They were down in the dumps on that, at 20% of their net worth in Bitcoin, much to my chagrin. They're feeling good now. If they talk to me about it, I'm gonna tell them to get out. Or get it down to a speculative bet level, right? Not so much tied up into it. You got lucky. You got an out here. Let's get responsible about our allocations. Two minutes. So what's the deal here? I'm not I'm not like amped up about this. My finger's not on the trigger to put on some position really, really quickly. Let's just see what happens here. Pretty much, we might consider a layup back down from the initial, place we were in from before. If we get that, I'm not going to buy some rip, down there. It would have to stabilize and show me that it's a good trade. And we could be a little more aggressive on the upside if we break above the CVA and pull back. So we broke above it. We'll watch our volume-based chart. It's faster moving, more responsive. That was delta neutral right there on the spike. Almost to the target. Almost to the target. Crude oil, you dirty dog. You win again. We lose for the sake of risk management. All right, that's it. Trade's over. Now, does the monthly have more room to run? Yes, it does. Right? Do we start putting ourselves in a more precarious position trade location wise on the weekly? Yes, we would if we started to, pursue longs up here. So that's probably going to be it for me in crude. We'll let things shake out. Who knows? Maybe we get, a really big pullback here. The volatility persists a little longer post-release. And we do get the breakout pullback of the CVA. Who knows, right? Maybe that's in D period. Maybe that's 30 minutes from now as we spend some time retracing or something in E period. We still have these poor highs up here. And as I said, that's easy pickings. If we just focus on the monthly, is the destination hit? No, it's not, right? Monthly can go +2. Monthly can go way higher. We can run stops above these areas, although these are not, when I talk about running stops, a lot of times I point out kind of poor high areas. These have some wicks to them, but they don't on market profile. Okay. Past 2 days have gone to the same tick during the RTH session. So participants use that. They will be looking at that today, just like we are. The monthly's been, in fact, the weekly, I'm sorry. The weekly +2 is up there. So that would be the ultimate extreme push. We're not fixated on weekly developing value area high as like a must be, like the ultimate high of the move and whatnot. Although by definition, the destination has been completed on the weekly. So certainly takes a bit of wind out of our sails here heading into the afternoon session. Well, look, it's a flaggy pullback on RTH, like a fast trend play. We could go for it here, right? You can, and it may very well work, but what's your trade location? You need to always be asking yourself, what is my assessment of risk if I were to achieve this particular trade location? Right? And if you're getting in from the lows like we were this morning, your assessment is that the risk is very low. I can be aggressive. I can go for it. If you're getting in at this level, your assessment needs to be getting pretty risky up here at these prices, right? S&P weekly +2. Poking our head above 10K. All right, guys, probably going to be very, very boring to sit here on the call. At this point, I think we've pretty much taken what we could out of the markets that we chose to participate in and liked the risk reward of, which was crude oil. So a good battle today. It was a really good battle. We got tossed around. Today's review at the end of the day will probably be much more interesting than the past ones have, because we're talking about literally just one trade that just worked beautifully, right? Today, even our scratches at certain times were, I don't think I'm going to say that they were bad decisions, but we got made look bad by the market, right? If that's the correct English. The market made us look bad this morning for a while until we got the real trade. We talked about it before it set up. Hey guys, if you want the real trade, don't mess around with this aggressive stuff I'm doing. If you want the real trade, here's what it'll look like. And the market gave that to us as kind of a peace offering for how mean it was to me for a while there. So anyways, great session. A lot to learn from today, maybe even more than other sessions. So anyways, we'll come back. We'll talk this afternoon about what we're currently seeing, if there's anything new developing. If we get any kind of breakout pullback here off the CVA structure prior to us taking out these poor highs and really hitting extremes. Yeah. Adios, guys. Good questions. We'll bring your questions for this afternoon too. See you.